And really, the answer to whether you should invest or pay off debt with inherited money comes down to two things. One, what's the nature of the money that you're inheriting? And number two, what's the nature of the cost of your debt? So let's go first to the nature of what you're inheriting. There's a big distinction between what you would do if you've inherited $200,000 that are within retirement accounts versus $200,000 that came from the sale of your parents' home. In the latter case, that's just cash. And so you can kind of do with it as you want. If you went ahead and cashed out that $200,000 inherited IRA, you'd be having an additional $200,000 in income that year. So you then be owing $70,000, $80,000 in taxes on that income. So that's maybe not the most tax effective thing to do. So that's the nature of what you're inheriting is a big factor. The other big factor is, well, what's the cost of the debt? So if you've got a long-standing mortgage on a home that's sitting at 3 or 3.5%, and it's then tax deductible, your after-tax cost of that debt is down in the twos. So that's not that hard to beat if you were to then invest those inherited assets. On the other hand, if it's credit card debt sitting at 15%, then the likelihood of generating long-term returns from investments that are higher than 15% per year, cost of that debt, yeah, there will be years in which that happens. It is not something that is going to be achievable in the long run. So pay off that credit card debt with those inherited assets as soon as you possibly can. So it's the interest rate on the debt and the type of assets that determine what's the best action to take between investing inherited money or paying off debt.